Here's with our trades. Does that make Goldman a buy? Let's ask CEO David Traynor. David, welcome to you. And what do you think about the stock here?
Hi, Kelly. Yeah, Goldman Sachs is one of our favorite financials. Has been for a long time. Look, having been in Wall Street myself, Goldman was always the top of the pecking order. And their returns on capital, the return on equity, their profits have reflected that. And we continue to be constructive on this stock. We think it makes a lot of money, huge cash flow, and it's still relatively cheap.
All right, let's move on to another one that has huge cash flow, makes a lot of money, and may or may not be relatively cheap. That would be Nvidia. Its CEO Jensen Huang weighing in on the strong demand and supply shortage for Nvidia's latest generation of chips, saying the scramble for his company's products has frustrated customers and raised tensions.
Demand is so great that delivery of our components and our technology and our infrastructure and software is really emotional for people. Because it directly affects their revenues, it directly affects their competitiveness. And so we probably have more emotional customers today and deservedly so. And if we could fulfill everybody's needs, then the emotion would go away. But it's very emotional. It's really tense. We've got a lot of responsibility on our shoulder, and we're trying to do the best we can.
So that sounds like a question, an observation that demand is outstripping their ability to supply. Is that a problem or an opportunity?
I think it's a little bit of both. I mean, there's an enormous amount of capital being allocated into the AI and the semiconductor space for this reason. And look, Nvidia is a great company. High returns on capital. I mean, like 10 times what even Goldman Sachs is. I think Nvidia is around 195%. But the expectations baked in the stock price have more than that baked in. I mean, when we run the numbers in our reverse discounted cash flow model, we just did a big case study on Nvidia because it's a poster child for good company, bad stock. The stock price implies that the profit's going to be something in like 10 times bigger than Apple and Microsoft combined today. And the revenues will be bigger than the GDP of the UK. So we're talking about a stock that has all that good news priced into it. This is not new news. I mean, Nvidia has become a very crowded and popular trade. I don't think investors should be surprised to think that, oh, maybe all the good news is priced in. And as a result, we called the top in the stock a couple of weeks ago. And so far, that's turned out to be a really good call. We think on the margin, this stock has got a lot more downside risk.
So that's a sell.
Yes.
All right.
It's almost a short, but I don't know if you would dare with a name like Nvidia. Let's move along to Toll Brothers, David, which is on the decline today, actually, even with what's happened with this drop in mortgage rates. CEO Doug Yearley was weighing in on that and the impact it will have on housing affordability.
The builders have done so well with high rates, which no one thought they'd do. We've been sitting on 7 to 8% rates now for the last 2 years. And finally, they're in the low sixes with a feeling that they're going to get lower. And that's when the builders sell more houses because the affordability, all changes.
I wonder if that takes away their competitive edge, though, David. I mean, they've been doing buy downs. They've been able to be more competitive and kind of entice the buyer in a way that the existing inventory could not. Maybe their competition heats up now. What would you do with the stock?
We like the stock. This is a buy-rated stock, and we've been really constructive on a bunch of home builders for a while. D.R. Horton's been one of our top focus list performers for a long time. NVR is one. I think Kelly and you and I talked about that one a long time ago. And, look, the supply-demand outlook for these businesses is really strong. There's too little supply, and we need to build more homes. And the best builders, the really profitable companies, we think continue to be in a position to see continued profit growth. And their stocks are priced as if there will be no profit growth. Like, for example, with Toll Brothers, you're getting a free option on growth. The current stock price implies, the opposite kind of Nvidia. With Nvidia's stock price implies all this huge amount of growth. Toll Brothers implies zero profit growth from current levels. So we like the fact that it's profitable. It's seen great profit growth, yet the valuation implies there will be no profit growth. So that's good risk reward for us. We like that in this environment. And it's really getting increasingly difficult to find stocks we like in this good environment. I know Tyler always gives me a hard time because it's always sell, sell, sell. We did 2 out of 3 today, and we're glad that Toll Brothers made the list.
All right.